Remortgaging for home improvements. Once you've lived in a property for at least 6 months, you then have the option to remortgage for home improvements. This involves releasing equity from your property in order to fund the costs of the home improvements. There's 2 ways you can go about remortgaging for home improvements, and it all depends on the amount of time you've lived in the property and if your current mortgage product has penalties. Remortgaging involves paying off your current mortgage and borrowing extra. For example, if you owe your current mortgage lender, say £200,000, and you wanted to fund £25,000 worth of home improvements, you would borrow £225,000 from the new mortgage lender. The best time to remortgage and borrow extra is when your current mortgage deal is coming to an end, so that you do not have any penalties to pay when you remortgage your property. Remortgaging means refinancing. You may have had a 5-year fixed rate which expires and your mortgage therefore needs renewing. This is the best time to raise extra funds for those home improvements. But what if you've only lived in your current property for a short amount of time? And to remortgage would now mean a big penalty, which of course you would want to avoid. The second option is to raise funds in a similar way to remortgaging, but obtaining a second mortgage, also known as a secured loan or second charge. Your current mortgage is known as the first charge, and any additional borrowing is known as a second charge. Your current mortgage lender would need to give permission for the additional borrowing in this instance. A second charge means you avoid paying penalties to your current mortgage lender, and you could therefore borrow additional funds. In the example we spoke about earlier, you would borrow an additional £25,000. The rates for second charges are higher because of the convenience factor, but because the loan amount is much lower when compared to your mortgage, the monthly payments will be a lot lower when compared to, say, a personal loan. Not the rate, it's because you are spreading the payments over a longer term, which will reflect your current mortgage term. So if you have 25 years left on your current mortgage, you can take the second mortgage over 25 years as well. Second charge mortgages will either have no or low penalties. The idea is that it's just a temporary situation. When your current mortgage is ready to be renewed, you would then pay off the second charge at the same time. Whatever option you choose, either remortgaging or obtaining a second charge or secured loan, there are other factors that will need to be met as well. You need to have equity in your property in order to take money out of your home. Mortgage lenders will usually lend up to 95% of the value of your home for home improvements. So if your property was worth £300,000, your current mortgage is £150,000, you would have 50% equity. 95% of £300,000 is £285,000. So £285,000 take away your mortgage balance, £150,000, means potentially you have £135,000 worth of equity to tap into. However, your income must allow you to borrow this amount as well. Mortgage lenders will often ask for estimates for the home improvements, so it's a good idea to have all of your quotes done prior to applying to a mortgage lender. A remortgage will usually take around 4 weeks to go through from start to finish until you have the funds available, and a second charge is normally 2 to 3 weeks. Not every mortgage lender will allow you to borrow extra funds for home improvements, so you need to make sure that the right mortgage lender is chosen and you meet the criteria of that mortgage lender. Most high street mortgage lenders will require you to have clean credit. Some will allow minor adverse credit, but if you have defaults or county court judgments, it's going to be a lot harder to remortgage for home improvements. And your best option might be to consider a second charge, as these mortgage products provide much more flexibility with adverse credit. Whatever your situation, we could help you with remortgaging for home improvements. Just get in touch and book a free, no obligation chat with me by clicking the link in the corner of the screen or on the mortgage chain logo at the end of the video. And we can discuss the options that you have for remortgaging for home improvements. Mortgage warning: as a mortgage is secured against your home, it could be repossessed if you do not keep up the mortgage repayments. Have a beautiful day. I'll see you in the next one.